example. We're going to be shocked at how many robots are going to be doing. Now, they're not going to be humanoid robots. Some will be just pick and place, it depends what you mean by that. But we're trying to size that opportunity ourselves, and robots. If you think about it, autonomous vehicles are robots, and we're still trying to get those to work. That Tesla has 5 or 6 million of them out in the world, right? I have 2 of them, a Model 3 and a Model Y. So I think we're going to turn around and kind of say, oh, okay, that was the evolution towards robotics, that vehicle, which begs another question. We're still trying to get autonomous taxis, robo-taxis really working at scale. And of course, Elon famously, and in his last quarterly call, it was very interesting. He did not make a prediction, but I think since 2016, he's been making a prediction that would be within a year or two. Now that he's not making the prediction, maybe it is about to happen. Who knows? Because slowly, then all at once. That's, yes, as you know very well, the history of technology. But it is taking so long to get a fully scaled autonomous platform. I mean, we expected it initially in 22. Now we're saying late this year, next year, and we do see Tesla starting to gear up from its job postings. But is it again? No, yes, sort of like
no.
his landing.
I like that. Slowly, and all at once. That's a great title for a book.
We've all seen expectations of Tesla's Q1 deliveries and how all analysts thought they would be bad, but the numbers just came out, and they came at even less than expected, with the company delivering just 386,810 vehicles globally in the first 3 months of 2024, down 8.5% from a year earlier. But despite all of this, Cathie Wood is still buying more Tesla shares. In fact, she bought an extra 84,164 Tesla shares just a day before Tesla reported deliveries. Not only that, but she actually dropped some hints on why she's keeping her Tesla stock price target at $2,000. Now, I know what you are probably thinking. Cathie has already made some pretty bold predictions about Tesla, so isn't this just another wild guess? Well, to answer the question, this is not a guess, but rock-solid analysis backed with a whole lot of visionary thinking.
The number I heard from Brett and I think from Vinod Khosla was as many as 10 billion by 2040, like as many humanoid robots as humans.
Yes, makes sense.
Which is amazing, right? I think about how many cars there are in the world, and I had to Google that the other day, and it's under 1 billion cars, which surprised me.
Yeah.
So more robots, which is why Tesla is saying, this is a much bigger opportunity for us.
Yes.
Than cars.
It'll be interesting to see as well. I think there are a lot of folks at the moment are sort of thinking, what does the future look like where everyone has an AI, not necessarily a digital twin, although maybe that too, but an AI that is their coach and their counselor and their friend and just their helper. And whether that ends up becoming embodied in their robot that's paired with them, or whether it's a separate thing, or whether we have a whole dinner table of different AIs. I know folks like Mustafa Suleiman, who wrote The Coming Wave. He's got this thought with inflection.
I mean, I'm convinced we are all going to have a version of Jarvis, right? We're going to have, and Jarvis is my favorite AI model because I believe, in fact, we're going to have, and Jarvis will be our interface to the world. Whatever you need done, you speak to Jarvis. It can, if you're sitting in an F-35 jet, Jarvis, please taxi and take off and fly to 10,000 feet. It knows how to interface. It's got the ultimate API library, if you would. Mm-hmm. But what's really going to be interesting, I love playing convergence on Elon's companies, is Neuralink and Optimus. Right. So I want to plug my visual, auditory, and muscle, and my homunculus, my sensory and motor cortex through Neuralink into a robot. That's going to be very doable. And I can walk down the streets of Tokyo from Santa Monica on the other side of the planet. Maybe the speed of light's going to screw that up a little bit. Okay. Anyway.
Details.
What about the three-way convergence, Peter, with Neuralink, Optimus, and the X platform, and just having all those trillions of tweets into your brain at the same time?
Yeah. Well, listen, you mentioned I get it, and Cathie, you mentioned Ray Kurzweil, who has been a dear mentor and co-founder and partner. We've started a couple of companies together, and he made the prediction of AGI, whatever AGI means, by 2029, and people used to laugh at him, and now they're pretty sold that it's in that window. But he also made the prediction of high bandwidth brain-computer interface by 2033.
Tesla's not just a car company anymore. It's a tech titan, an autonomous driving leader, a clean energy powerhouse, all rolled into one. Yes, we admit that the results were bad. But let me say that when the dust settles, Tesla will be standing tall, leading the charge into a brighter future. So if you're ready to join the ride, buckle up and stay tuned, because we're about to dive deep into what's driving Cathie Wood's incredible Tesla price target, as well as why this automaker is poised to dominate the coming decade. But before we do that, if you want to keep up with Tesla's latest updates, as well as other large caps, you can follow our Twitter account. We post multiple times a day about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video. Monday wasn't the only time Wood went big on Tesla stock. A few days ago, Cathie Wood's firm ARK Invest recently bought millions of dollars worth of Tesla as the stock finished a dismal quarter. According to reports, Wood's ARK Innovation ETF bought 65,514 shares of Tesla, costing around $14 million. This move came just a few days after the fund bought 133,334 shares of Tesla, which cost around $28 million, continuing ARK's trend of increasing its bet on Tesla.
We've missed on the first quarter, and we've not just missed, Ed, but it is a considerable undershoot. Where was the main point of pain in these deliveries?
So first quarter deliveries came in about 74,000 units below the average analyst estimate. We went into this quarter thinking there's concern about demand for Tesla's EVs. Tesla is positioning this as a supply-side impact. They're talking about the diversion of shipping due to the situation in the Red Sea. And also, you'll remember the incident that happened in Germany near their Berlin plant. Tesla is calling this in their earnings, in their deliveries statement, a arson attack. That was something that was being investigated. But there's still a big discrepancy. The production volumes came in about 20,000 units below expectations. The deliveries miss is much wider. The other factor that they're talking about is in my home state of California, in the Bay Area, in the Fremont factory. Remember, the other thing that happened in the quarter was we got an updated, refreshed version of the Model 3. And what Tesla is saying in this statement is that there was a production ramp impact in Fremont as they introduced that refreshed Model 3 onto the line. But it is a big miss. The stock down 7%. And net, it's not clear, was this a demand issue, or do we take Tesla at face value and factor in the impacts of the supply shocks they suffered in the first 3 months of this year?
Cathie Wood's firm, ARK Invest, recently bought millions of dollars worth of Tesla as the stock finished a dismal quarter. According to reports, Wood's ARK Innovation ETF bought 65,514 shares of Tesla, costing around $14 million. This move came just a few days after the fund bought 133,334 shares of Tesla, which cost around $28 million, continuing ARK's trend of increasing its bets on Tesla. Hello everyone, and welcome back to Tesla Tomorrow. Tesla's stock is incredibly volatile for a company of its size, with its share price moving more than 25% during 5 of the last 8 quarters. The EV maker's market cap peaked at over $1 trillion in late 2021 and early 2022 before its stock crashed as much as 75% due to deteriorating market conditions and investor unrest tied to Musk's controversial takeover of the social media company, Twitter, now known as X. And now we have the delivery numbers, which represent the company's lowest quarterly performance since the third quarter of 2022. Notably, expectations for Tesla's deliveries were around 431,000 vehicles, and it delivered just 386,810. But despite all of this, Cathie Wood is still buying more Tesla shares. So why is she still bullish on Tesla? Let's find out. But before we break it all down, if you like this type of content, make sure to hit that like button, subscribe to our channel, and turn on notifications to stay up to date on everything happening with Tesla. ARK Invest's big vision for Tesla was recently reiterated by its Director of Investment Analysis, Tasha Keeney, who estimated a $28 trillion opportunity in AI's overall financial impact, particularly highlighting Tesla's artificial intelligence. She also projected a rise in equity market capitalization linked to innovation, reaching $220 trillion by the decade's end, with a focus on disruptive technologies like Tesla's advancements in autonomous vehicles. This shows that Cathie Wood sees Tesla as way more than just a car company. She thinks it's a full-blown tech disruptor, a company on the leading edge of self-driving cars, battery technology, and who knows what else Musk might dream up next.
Yeah, okay, so this is a beautiful segue into robotics and AI, actually. And, just trying to figure out, with Elon Musk and Optimus and, the possibilities here, how essential, we're trying to figure out what is coming first, the human advances in AI or advances in robot technology, or they're happening at the same time. Is this another convergence? We're seeing the physical and the digital world come together in profound ways, and is that what's happening effectively here?
I've been building robots since high school. Built my first robot in ninth grade, and I've been building them ever since. Not in the last 20 years, but throughout college and grad school. And you can see some advances in material sciences, in artificial muscle materials and sensors and better batteries and better imaging and so forth. But 99% of the advances now are all AI. It's the ability for the robot's a sensor suite and an actuator suite, and the ability for that robot to parse the information and make the proper movements is all sitting on top of GPUs. Our robots have gotten brains, and it's a beautiful, beautiful thing. I was talking to Brett Adcock from Figure. All right, my venture fund's an investor there, and he was showing me, and they just got like a large, like 700 million or thereabouts from a number of investors to move it forward. And he was showing me how they had Figure, which is the name of their robot and the name of their company, watch a person making a cup of coffee in Keurig and watching them 30 times, just repeat. And in a multimodal mode, it was able then to parse it into understanding the parts, the steps, and the motions required, and then it did it perfectly.
Yeah, we saw that video. It is available out there. I would suggest anybody go look at it to see, how the fingers are now operating, and so precisely. It's really marvelous.
It's going to be. I think it's so. Listen, I live in Santa Monica. It's where I'm broadcasting from, and we have these little six-wheeled robots that are running around the streets and are delivering food. Right, and a local shop puts it in, and it runs down, and you can order it that way. And the first time you see it, it's like, oh wow, that's cool. I wonder how it's crossing the street, and you're super enticed. And then after you've seen it 100 times, it's like, get out of the damn way. Right?
It's true. It's
so
true.
I think that's going to happen with our humanoid robots too.
Yeah, that's so interesting.
Yeah, we humans get used to stuff so fast.
Right. So when you say that, what are you saying? I mean, they're going to be able to do things much better than human beings can if they're repetitive and, involve a lot of precision and so forth, right? So we'll be happy about that. They'll be taking all of these jobs that nobody really wants to do.
Cathie Wood has a wild imagination when it comes to the future. We're talking robotaxis zipping around everywhere, completely transforming transportation. And Tesla, in her view, is perfectly positioned to dominate this robotaxi revolution, a market worth trillions with a capital T. Aside from robotaxis, Wood is also bullish on the future of Tesla because of robots. She thinks that there might be as many robots as there are humans around us soon, and we all know that Elon Musk himself said that he thinks Optimus has the potential to be more significant than Tesla's vehicle business over time. Recently, Bernstein analyst Tony Sacconaghi made a big revelation, and it's that Tesla's stock move is largely justified by falling fundamental expectations as opposed to being more narrative-driven. Now, this leaves us with one big question to answer, which is, why are Tesla's fundamental expectations falling? And what is the next strategy to adopt? Let's see. Right now, there has been a perceived drop in the rate of EV adoption, particularly as global economic conditions tighten. And this is because tepid EV demand globally is linked to cost-conscious consumers. Electric vehicles remain, on average, more expensive than their gas counterparts. And this has even been made worse by a decline in government subsidies incentivizing drivers to switch from gas vehicles and higher interest rates for car loans. This decline in EV demand has taken a toll on the entire industry, but does it signify an end to Tesla's growth? Definitely not. In fact, Tesla is trying a new strategy to scale up its EV business, and we think it's going to be interesting.
Hey, Phil, full year estimates, I guess we can say goodbye to some two handles, right?
Oh, I think that's a given. I think that's a given. Most were already bringing them under 2. We had a few people saying 1.91 million deliveries for the year as the estimate that they were putting out there. For some perspective, and I don't know if we can pull up the chart that we have showing annual deliveries, they delivered 1.81 million vehicles last year. And if they were to go to 1.92, 1.93, that would be about an 8% increase in deliveries. Now the question becomes, do they hit 1.81 million? Is there a possibility that they don't even make that? That possibility is out there, but it's early, and a lot of things can change. Obviously, production is likely to come back much stronger, and deliveries should improve in Europe. They've been clearing out a lot of inventory in the first quarter, and if things start to firm up a bit, then certainly we expect higher numbers in the second, third, and fourth quarter. To what extent remains to be seen. China's the wild card in all of this, guys. They are brutally competitive in terms of what's happening with EVs and EV pricing, and that's having an impact. There's no doubt that that's having an impact on Tesla. And remember, Shanghai is not just where they supply China, but that's also where they supply other markets around the world. So they can offset some of the impact of just pure China and the competition there in terms of vehicles being shipped to other markets out of the gigafactory in Shanghai. But there's no doubt that this competition in China has had an impact.
Tesla has been operating for so long without spending a lot of money on marketing, and it has been successful thanks to Musk's strong social media presence and word-of-mouth marketing. But by looking at Tesla's delivery numbers, you can say that depending on word-of-mouth just doesn't work anymore. So here's a question that might trigger your curiosity. What if Tesla actually starts advertising? According to recent data from Vivix, a subsidiary of ad tracking platform Media Radar, and a report from Wall Street Journal, Tesla spent an estimated $6.4 million on digital advertising last year, dwarfing the $175,000 that the automaker spent in 2022. Tesla's ad spending was mostly focused on YouTube, but also included campaigns on Facebook, Instagram, Google, and the Musk-owned X platform. So, how will this new strategy play out? Will it be a power boost for Tesla, or a case of flashy chrome distracting from the real engine? To be fair, Tesla has done pretty well without blasting commercials at us during every commercial break. Its cars are like rolling billboards, sleek, futuristic, and driven by people who love to chat about them. This word-of-mouth marketing, fueled by happy customers and Elon Musk's social media mastery, has been a key part of Tesla's success. It's like having a legion of brand ambassadors who do free advertising with a side of genuine enthusiasm. However, there's a limit to how far friend recommendations can take you. Tesla definitely has the early adopter crowd on board, but not a lot of people actually know a lot about the company. This is where strategic advertising could come in. Imagine Tesla running ads that highlight features beyond just the car looking cool and being sustainable. Ads that could showcase the everyday benefits of using Tesla cars, like the lightning-fast acceleration, the surprisingly spacious trunks, or the ever-expanding network of supercharger stations that make road trips a breeze. This could significantly increase its customer base. Another way ads are really helping Tesla is the fact that the company is now advertising the prices of its cars, which is very helpful because the majority of people don't know the actual prices of Tesla's vehicles and think that they're a lot more expensive than they actually are, resulting in the company losing a lot of potential customers. Advertising will not only be a big deal for Tesla's EV business, as it can also bring the company's AI potentials to limelight, which could also attract a lot of potential customers. Cathie Wood's firm, ARK Invest, has been researching the impact of artificial intelligence for a long time now, and she thinks some of the things that we are seeing now are just the beginning of the impact that artificial intelligence is going to have on every sector, every industry, and every company. Wood's prediction is quite simple, and it states that at 100% adoption, AI is going to converge with everything. What this means is that, with better and more specific data, there will be improved AI models, which will consequently give rise to better products and thus attract more customers. Therefore, winners in AI will be companies with high-quality, domain-specific AI training data across vertical applications. Cathie Wood previously said that she thinks Tesla is the best AI play in the market, and we already know that the company is aggressively amassing a lot of data, which is all the more reason to be bullish on Tesla stock. So, even though the stock took a considerable hit after the bad deliveries, this could be a great opportunity for investors who are interested in buying more shares, as there's still massive potential for Tesla's overall business. What do you think? Can Tesla's stock price ever go above $2,000, especially after these delivery numbers? Let us know your thoughts in the comment section. If you would like to know more latest updates about Tesla, then go ahead and click on the next video on your screen. See you there.